Welcome to Money Market, a Bank of Tampa podcast. We highlight the businesses, expert business advice, local economy, and points of interest in the Tampa Bay market. Follow us on YouTube, Spotify, and Apple, or wherever you find your favorite podcasts. And please be sure to share this episode with a friend or colleague. I'm your host, Owen LaFave, the Pinellas County Market President for the Bank of Tampa. Today, we're joined by CBRE, Tampa, or Upper North Florida?
North Florida
Executive. Right? President?
North
What's
Florida.
your title?
North Florida Senior Managing Director.
Senior Managing Director. Mike DiBlasi. And I have to say, thank you for the memo and coordinating. I think, it's darn near the same suit.
No, it's the same suit. We can thank David Kahn at Bespoke for that.
We can?
Yeah.
So much for the one unique suit. Although yours is a little different. You have the lapel button colored in.
And you one-up me with the pocket square. Nice. Well played.
David's personal touch there. So tell me about your bio. What's your background?
Where do I start? At what age?
Whatever you want to start.
No. Professionally, I've done a bunch of different things, but I actually started my career as an accountant.
Oh, is that right?
I was a CPA. After many failed attempts at taking the CPA exam, they finally passed me.
Okay.
And I did that for a handful of years, and then I realized I wanted to do something different and decided to take a little risk and kind of found my way into commercial real estate. Started as a property manager and then worked my way into brokerage over at Cushman & Wakefield, thanks to Larry Ritchie. Mm-hmm. Gave me an opportunity and then kind of stayed on that side of the business for a long time. And now I lead our North Florida markets for CBRE, which includes the west coast of Florida, Orlando, Jacksonville, and the Panhandle. Yeah,
congratulations. I know that's a recent promotion. So I'm assuming your Spanish isn't very good because they would have given you Miami too, or what happened there?
It's we are one state, but in many ways two separate states at times. So our business in South Florida is very much different than our business in North Florida. So it was kind of a natural fit for me.
So what does your travel schedule look like now that you have the rest of the state?
It's not bad. I mean, I do believe in spending time in those markets. I have leaders in those markets, mm-hmm. So there is somebody there that's leading the charge on a daily basis. So I do want to get there and spend time and get to know the teams better and the businesses better. So I've already made a trip last month. I'll probably make a couple trips next month. And then maybe a couple more before the end of the year, but it's not extenuating.
Okay, well that's good.
Yeah.
So and it's good to have good leaders in place that depend on.
Oh, it's we're only as good as our people, right?
That's right. So I wanted you in here to talk about the demise of the real estate market.
Yeah.
Right? Because it's everything I read, Wall Street Journal. I mean, commercial real estate's tanking. It's going to take down the banking industry. I mean, we're going into to chaos and everything's going down in flames, right?
Yeah. Except if you live in Tampa, Florida.
Okay, good. Well, good. I guess that's the point. So we're mid-year.
Yeah.
How would you describe the first half of the year?
Well, I would say our business is on par on the leasing side.
Okay.
Which is the majority of our business. The investment sale business has continued to be.
Is it still abysmal?
Very abysmal. It's as bad as it's been in a long time, but there is light at the end of the tunnel. We're on that side of the business, we're doing a lot of broker opinion of values, which is where it all starts. Mm-hmm. And so, to my earlier point, we're in Tampa, Florida. We're in Florida, right? We're in a place where there's still a lot of business getting done. So I think the long-term prognosis is still wonderful. It's just how much longer are we going to continue to kind of bounce near the bottom as we make our way back up? And I think that's probably later on this year, early next year, and we'll start getting back to it.
So you kind of feel like we're at the bottom of the market here and we're kind of set for kind of a return to better times?
Yeah, I mean, especially on the investment sale side of the business, I mean, the volume has just been at an all-time low mm-hmm. for us, and so there's only one way to go, and that's up. as the little koala said in the movie Sing.
Yeah.
Right, you remember that guy?
Yes. Oh yeah.
Yeah, there you go.
So I mean, what is moving? Is anything moving at all?
Yeah, so I don't know if you saw, we just sold Net Park,
I saw
which
that.
is the largest office building in Tampa Bay.
I didn't realize
at
it was
almost
office.
1 million square feet. Yeah.
Okay.
So that's a big deal.
Yeah. What was the cap on that?
I don't know. The property I think is about 60% leased. There, given the size of the property, there's a potential future play as industrial at some point.
Okay.
Which probably factored in to some of why it transacted.
Mm-hmm.
But yeah, I mean, we're celebrating all sales nowadays,
Sure.
all sales. So, we're still doing a lot of single tenant net retail, some multi-tenant, industrial still about as strong as any of the food groups. The multifamily space is pretty slow right now. Office has been slow, but we've done some transactions there as well, and same with land. So overall, activity's down, but we're still getting some deals done.
Well, the Net Park transaction is interesting because when you look at the market, I think Tampa, and you correct me, you're the expert if I'm wrong, but it seems throughout the rest of the country, the urban core is still struggling while the suburban markets look fairly strong. And I think, if we look at our market, it's reverse. The West Shore Business District, the downtown St. Pete, downtown Tampa, both relatively strong. It's kind of what's on the outskirts. So the Net Park in East Tampa, office space up in Pasco County. I mean, all that is really soft, right?
Yeah, you look at the occupancy of our newly built office buildings over the last 5 or so years. I mean, it's well into the 90s. Mm-hmm. So that flight to quality is still there. Everybody wants to create that experience for their employees to give them a reason to come to the office if they're not mandating that they come to the office.
Sure.
So everybody's trying to move up to bigger and better space. And so that has been a strong push for our office market. And yeah, it's some of those periphery markets, especially out in East Tampa, that have struggled with some of that suburban, a lot of times suburban office that was built in the 80s or very early 90s.
And I know it's complicated to do an adaptive reuse of that because everyone's answer is like just turn it into multifamily.
Yeah.
But when you look at the floor plates and where all the the electrical and water run through, and then just to start with the fact that you're starting with a building that's probably not 100% vacant, so you need to get those tenants out. Even if it's 20% occupancy, you still have those tenants you have to deal with. So kind of the Net Park is interesting. So I mean. And not asking for any inside information,
Sure.
but that would be a perfect one if you could, get it down to, or maybe parcel it out to redevelop because it's a huge property. It's a former mall.
Yeah, former mall in a predominantly industrial area,
Yeah.
right? Industrial, we continue to see with the population growth and the desire to be more urban and closer to the end user. The success of urban infill industrial is still there. But yeah, so for the office, the suburban assets, I mean, we've valued corporate buildings that were single tenant buildings that are now vacant. Mm-hmm. And sadly, a lot of times the value is in the land under the building after you pay to demolish the building. Right. And so to your point, repurposing the building in its current shell is not feasible. But there is value to the land for another purpose. It just becomes like, what is somebody willing to pay for that? And in some respects, you look at it, and these are perfectly good office buildings. It's just a matter of how long until they get a tenant.
What I do, so I don't know if that property was a distressed sale, but are you seeing any in the way of distressed sales? I mean, we get calls. I mean, probably twice a week at least. People asking, "Okay, you want to sell any notes? Do you?" And I know there's interesting sales throughout the country, and there was a property that sold for $1 in Canada, I think, and we're just not seeing any of that yet.
Yeah, I think there's a lot of people looking for distressed sales. To your point, like I don't know, like did these people maybe in the Great Recession they feel like they missed out on it or something happened, and now they're circling. I mean, there are I've seen and we've done some, but not to the magnitude that you would think based upon some of the information that gets fed to us from the news outlets. So I think there's probably some more on the horizon. The lenders play a big role in that. Mm-hmm.
I guess to that point,
yeah.
I mean, are you seeing the financing being an issue with transaction volume right now?
Oh, 100%. Yeah. I mean, it's
bankers.
The interest rates proposed, they just don't make sense. When you look at, by the time you get in the asset with the rents in hand, like, is this a good investment? And it's hard to look at it and say yes. So yeah, we're all looking forward to interest rates going down.
Yeah, I think all of us would like to see some relief. From the bank's perspective, of course, we're also holding on to assets that have, treasuries in particular, mortgage-backed securities that, because of the interest rate environment, I mean, they're not worth as much as they were. So, I mean, we're carrying, an unrealized loss. And there's a lot of banks, fortunately, not us, but are in a situation dealing with potential liquidity issues that don't want to sell those bonds or can't sell those bonds.
Yeah.
And so it'd be nice to get a little relief there, as well as it would help real estate transactions, real estate values, and certainly make debt service coverage a little more attainable.
Yeah.
Which I know is an issue. So I think the last stat I heard on sublease office space is like 3.2 million square feet.
Yeah, sounds about right. We historically tracked about 500,000 square feet of sublease space. We're in that 3.2 range that we track, and
which is the largest in the state, right?
I believe so.
Okay,
I believe so, and the majority of that are large blocks of space. So if you think of our market historically has been a contact call center office environment, we succeeded on that for a really long time, where we built buildings that had really high density parking ratios, and so when a lot of those jobs moved out of those buildings, that created sublease opportunities. So a lot of these big corporate users have major blocks of space that they're all trying to move, and there's just not a market there for it right now. So that just adds to the number. So it leads to a misnomer of like, I'll be talking to somebody and they'll say, oh yeah, there's going to be some really great sublease deals out there. Well, if you have a really nice space in a market of high desirable market like downtown or West Shore, like that sublease is going to go fast. And there are times, because I just heard the team talking about it the other day, there are times where that sublease rate is going to be higher than the face rate that tenant's paying.
Okay. Yeah.
Yeah. So like it's a mixed bag. It's that narrative of like, we got all this sublease space, that's tons of opportunity for everybody. Well, yeah, if you're looking for 50 or 100,000 square feet in the Northwest Airport market or out in East Tampa, but if you're talking about West Shore, the space goes fast and people are willing to pay for it.
It's expensive.
Yeah.
I guess to that point, to me, I see that as a potential weight on the market. So when people ask me like, why? It's pretty obvious. I don't really get asked this question often, but as I'm analyzing the market and people are like, why are banks so stingy on office? That in particular, office leases are typically longer term in nature. Everybody's reassessing, their needs. We don't know what hybrid did, and if your team is hybrid, but you're still requiring them to be there a couple days a week. I mean, effectively, you need the same space, and maybe you reconfigure it, and maybe you don't need 100% of the space, but you need 75. And so we've got all this uncertainty out there in the market that what is the rollover going to look like? What is the space that a company is actually going to need? And as a bank, that's risk. We're lending people's deposits, so why are we want to lend on something with so much uncertainty? How does that play into like an investor looking at a piece of property? And
yeah, that's the biggest challenge with office is just like what is the future? Mm-hmm. I mean, everybody's still trying to figure that out.
You don't know. You don't know. I can't. Figure
yeah, we have workplace. We have a workplace strategy team, and they're always going through the process. We just moved our office a year ago. With the new size, style office. I don't know, but I suppose there's probably been changes in the last year that people would change. That we would, if we built our office all over again, we would change. So trying to figure out that footprint for most companies is their biggest challenge, because as you said, you're making sometimes a 10-year commitment on a space that may or may not work for you for 10 years.
Right.
And then as behaviors continue to evolve, I mean, one thing I think everybody can acknowledge is that hybrid working is here and has been here. And there are some companies that are fully in office every day. There's still some that are fully remote, but the majority of them are in that hybrid environment where they're trying to figure out what is the right mix for people to be in office. And until all that gets figured out, it's hard to really pinpoint what the future of office looks like.
So what's your policy at CBRE?
Yeah, that's a great question. I don't know if we have a.
What's your policy?
I think our policy is you are to work with your manager on an appropriate schedule for you.
Okay.
My general sentiment is I totally value people being in the office, not because I want to know what Owen's working on every day, right? I value because I know what people can achieve when they're together in a space, face to face. I also know the communication gaps when people aren't together on a relative basis. We have a lot of partnerships in our office. It's a lot like a marriage, and I can tell the ones that aren't spending enough time together, and then the others that are there in lockstep with each other every day.
Relationships,
yeah. I'm the marriage therapist, no. So it's again. I think there's a lot of corporate users, big banks and stuff that have come out with some mandates, and I know we're helping some on a national scale try to figure out like what does their next headquarters look like so that they can attract and retain the talent. everybody's still trying to figure it out.
Yeah, I don't know. I think it's going to take a while for us to work through it all. But so you had mentioned industrial still being relatively strong. I mean, it's been kind of the darling for, like, I don't know, better part of a decade, maybe. I mean, what are you seeing in that market?
I should have stayed an industrial broker. I got out too early. But no, it certainly has slowed down. But I think this year will be the maybe third best year ever in industrial. So it's all relative. I mean, we hit levels in 2021 and 2022 that are, it's hard to continue to grow from there.
Yeah.
So, but I mean, the warehousing of products and people wanting their products immediately, and the population growth and all of the factors that go into the need for industrial space, I don't see those behaviors changing anytime soon. So, I mean, you're going to continue to see more and more large warehouses as you drive to Disney World on I-4. Which is pretty cool because we didn't see that for a really long time.
Mm-hmm. What about retail? Are we still? The retail apocalypse never really came, right? I mean, there's some some C, maybe some B level malls that have gone by the wayside, or still kind of struggling a little bit. But
yeah, retail's been extremely healthy. Tampa over the last year has been one of the top 10 retail markets in the country for like rental rate growth and occupancy, and so. If anything, we don't have enough product. We don't have enough quality retail product. We have a lot.
Is that part of because we're not really building much retail? Is that why the market is performing?
So there was a lack of development with retail, and then now you're at a point with construction costs and land basis and things that the retailers they're very firm on what they can pay for rent. Right, it's all a function of what they're going to generate for that particular unit.
Yeah, for sales, right?
Yeah, so they won't open a store if they can't. On the front end, know that they're going to be able to afford. They're not going to like take a risk and go say, "Well, we'll figure out how to get to that level of sales." They kind of know what they're getting into based upon the demographics. So we spend a lot of times with our retail clients, and we're not able to put deals together sometimes because what they're looking for at the price point they need to pay just doesn't exist right now.
Are you seeing cap rates adjust at all with interest rates?
Yeah, certainly. Yeah, certainly. Yeah.
So finally starting to edge up a little bit.
Yeah, they have to, right?
Well, it's interesting though. I still see like things, trading in the 4s and sometimes 5s.
Is that creative math on part of this on part of the sales broker?
Maybe. I mean, your folks are good. CVRE is like spinning some good stuff. But
well located, quality real estate with good tenancy. There's still a high demand for that, so that's what pushes the envelope there. It's some of the other stuff that starts pushing up.
It's just I scratch my head and looking at something with negative leverage. I can go get a bond at 5%, right. And like why would I invest in real estate? But yet, I mean, I get it's an annuity. It's locked in for longer potentially, given the tenant and the lease.
Yeah, maybe there's some rental rate growth in there, right?
Yeah. So someone's making the math work. So. All right, I guess lastly, what about apartments? Is apartments the next shoe to drop?
That's a good question. Again, we had some of the highest rental rate growth in apartments over the 2 or 3 year period there coming out of the pandemic. Mm-hmm. I don't know how people afford their apartment rents around here. I mean, when I know I'm old, but when I compare it to what I was paying in my 20s, it's astronomical. Something's got to give there. But I think we still need more places for people to live. We still have people moving here. So as long as we have that, and maybe the lack of affordability on buying a home for yourself, we're still gonna have those need for apartments. It's just a matter of do we still need a bunch of brand new apartments, and can people continue to pay those rates, which pushes up on wages and things like that. I mean, we have a lot of people on our team that have acknowledged that they got their rent renewal notice and it went up 30%, and their pay didn't go up 30%. Right. So it's a real problem.
No, we had a lot of those conversations too, and I know rents have mildly pulled back recently with all the inventory coming to market. But when you look at the inventory that's coming behind it, I mean, so we'll kind of peak out this year and into next year, and I mean, there's virtually nothing coming behind it. I think we're dropping from, I think we delivered 10,000. We got another 14,000 to go, which is, I mean, historically is a ton. But then I think it's like 2,500, maybe 3,000 are permitted. So I think we're going to have a little bit of a lull. Yeah. And then unless we have this huge recession, I mean, I think we're going back to 5 to 10 to 15% rent increases. So
yeah,
I mean, how do you see the market evolving over the next couple of years?
Good question. I mean, this is a great place to live and work and have a great quality of life. So we've had a lot of tailwinds behind us that I think we'll continue to see. You have some really transformative projects out there with Gasworks and Ybor. You look at what Water Street did in their first phase. There's phase 2 coming behind it. You look at Midtown and the success there over in Pinellas. You look at the gas plant project and what will be happening there.
Generational change, yeah.
Yeah, like really projects that if we had one of those 10 years ago, you would have been calling every relative you knew outside of Florida, telling them about this project. And now we have several of them.
We did for Water Street. That's what we did.
We did. And it got us in a lot of publications.
It did,
right?
Yeah. Put us on the map.
So yeah, to have all that happening, I mean, those are projects that are going to take 10 or so more years that will continue to reshape our greater region, which just brings more attraction to the Tampa Bay area, more people to the Tampa Bay area. And, not a day goes by when you don't come across, I mean, we've had people transfer from other markets, from mainly Midwest or Northeast markets to our office here just to want to be a part of what they've heard is going on in Tampa. Right?
I mean, it's exciting.
Yeah.
I mean, it's a great time to be in Tampa Bay. So speaking of that, now that you lead other markets, and I've got a feel for kind of the rest of the state, how does Tampa Bay compare to Orlando, Jacksonville?
Yeah, so we're probably most like Jacksonville in some ways because we have the water, and they're probably where we were 10 or 15 years ago.
Okay.
So they have all this waterfront. They're learning how to embrace it. And so there's, with the Jaguars project and some related projects, they're getting a Four Seasons hotel up there. Like there's a lot of really good things going on, but their downtown still is in need of that resurgence. So it'll be just a matter of time as they continue to build that out, and then Orlando's its own animal. It's just such a unique economy based upon pretty much tourism. So, I mean, there's, Disney is always doing something. So that region will continue to grow. So yeah, all of our North Florida markets have been strong, even as you go over to the Panhandle and all the way down into Naples. I mean, that Southwest Florida market through the back end of the pandemic, with the amount of money and population that have moved in, it's a real commercial real estate market now.
Interesting. Okay.
Yeah.
So specifically about CBRE, I mean, what makes CBRE unique from the other brokers in the market? I mean, what sets you apart?
That's always the $1 million question.
It
right?
is, right?
Yeah. Get asked that all
Besides
the time.
you.
Why would I come
you're
to
the X factor, yes.
I get that. Right? We're going to sit down. I'm going to recruit you. You're going to say, why am I going to come to
Right.
CBRE? There's a lot of great reasons. I'm a people person, so I'm going to say it's a lot of it has to do with the leadership and the people within the company. And then that filters down right into the local markets. At the end of the day, the company as a whole has been has had financial success that has allowed us to reinvest back into the business. So a lot of things are data and information driven now. So our accessibility to the real-time information of what's going on in the market based upon our market share is second to none. And so that information has extreme value to our clients, and we'll continue to produce that information. So that in itself, with the platform of resources that we put in behind our professionals, tends to attract the higher performing professionals.
Okay.
And then like attracts like, and then you kind of built out a culture of a place where people want to be. And so I take pride in the fact that I think we have really good people that, are great people. They also care about their teammates and our clients and our community, and they like to work hard, but they also have a work-life balance, and they get that we're not saving lives here. We're working in commercial real estate.
I know in banking, we are struggling with attracting younger talent. I mean, there's a talent gap. We've got a bunch of older bankers. We went, I think, 15 years where we just didn't train bankers, and now we're trying to attract younger people to the profession. But how do you go about doing that? How does CBRE go about doing that? And then once you get them in the door, how do you develop and keep that talent?
Yeah, that's the $1 million question, right?
Right.
So a large part of our business is the brokerage advisory business, which is an extremely challenging business, not only to get into, but to have long-term success in. So, we live in an environment where a lot of things you can manufacture or get overnight. A successful career as a commercial real estate broker cannot happen overnight. And so it's a little tougher sometimes to attract that talent, because a lot of these kids are going to school and they're coming out with advanced degrees and they can go get paid this big salary by XYZ company. And we're saying, just come work for us for commission only. And that's a tough proposition.
Sure, it's tough.
Unless you have the financial backing by a relative of some sort. Now, we do oftentimes pay somebody a salary maybe in their first year, but the end goal is always to be commission only. And so that takes a very special individual. And then we're going to make an investment in them with our time. To me, the most important thing is who are they working with on a daily basis? And is that person committed to the mentoring aspect? And as you know, mentoring is giving and pouring into somebody without expectation of anything in return.
Sure.
And a lot of times you don't get a return on that investment. But I try to talk to as many young people as I can that are looking to get in the business, not to discourage them, sometimes to test them and say, I usually say, is this something you want to do or is this something you have to do? Because I think if you want to do it, it's hard to get hired.
Distinction, yeah.
And eventually, if you don't find something in 3 or 6 months, you'll move on and you'll go into another field and have a great career. But if you're like, I have to do this, I wholeheartedly believe you will find a way. Now, a lot of times you might start in our research department, or you might be a marketing coordinator. All of these places that you would look at and say, well, that's not what I want to do. I mean, I look at my situation. I started as a property manager. It just got me one step closer to where I wanted to go. Mm-hmm. But again, that's a tougher pitch, I feel like, nowadays with young professionals in trying to get them excited about doing something that they don't maybe necessarily think they want to do. Yeah. But ours is a relationship business. Get a job at CBRE. I tell them, get any job you can here. Come in, do a great job. Build relationships. Show you're capable of more than what you're doing. And then the next time there's an opportunity, guess what? You're already here. You have a leg up on everybody else. So nothing's brought me greater joy than to know that we hired an intern one time and that we've promoted marketing coordinators to brokers. I mean, these are people that went from the very early entry point of the business to now are making significant amount of money in a career that they built for themselves, but they had great mentorship. So it's definitely a challenge as we make our way through. But we're in a team sport now. When I started, I was not on a team, and that presented some opportunities and challenges at the same time. We won't bring somebody in unless they're on somebody's team.
Okay.
But it's hard. That's a hard arrangement to make when you don't know somebody.
Yeah.
To have that trust and build that trust over time, and then you got to really. I mean, the younger brokers in our office, I say to them all the time, like, maybe your senior partner you feel like isn't getting after it like maybe they did when they first started, but I can assure you, when they were early in the business, they were staying late. They're working on weekends. They're doing all these things that are unpopular because your friends might be going to the beach and you might have to tell them, no, I'm going to go database so I can make better cold calls next week. That's no fun.
No, and I tell you, it is. I have had multiple conversations of just be patient, be persistent, work hard. It will come over time, and it's different for everybody. But I specifically, I almost remember that it was about 10 years in that my prospecting flipped, where it used to be all outward bound, right? Yeah. I was calling, knocking on door. I used to have like cold call Wednesday, I think, that people wouldn't return my calls. Yeah. I just showed up at their offices, sending countless emails and letters. And then I remember one day, I had no idea who it was. They called me and they're like, hey, Joe told me to call you, Owen. And I'm like, I have no idea who Joe is. But then they started to call me. Yeah. But it was all that groundwork, sowing seeds like you
Yeah, so I have a great line I use with all of our junior professionals when they start. And I got it from the great Jim Palladino from Cushman & Wakefield. Yep. He's and I was very early in my time at Cushman & Wakefield. And I was walking down the hall, and Jim, in his New Jersey accent, says, hey, DiBlasi, guess who's looking for you? And I said, who? Jim? He goes, nobody. Go pick up the phone and call someone. So I still use that to this day because it's a great illustration of your point, which is nobody knows who you are when you're starting any business. Mm-hmm. You got to get out there. You got to keep grinding. And one day the tables will turn and people will come looking for you. It's just not today, So I think that part of our business has never and probably never will change. I love to coach my kids' sports. And I think if in a perfect world, I'd be a college baseball coach. But that ship sailed. So I try to infuse some coaching into my daily routine. So I spend a good amount of time with our junior professionals, and part of that is just trying to help them navigate the team they're on, the business environment we're in, their career path, knowing that there was days I was splitting a lunch with Scott Garlick at the Pita Pit when we first started because neither one of us could afford a lunch on our own. And that, this is a tough business when you get into it, and you need people looking out for you. And if I can help in that department, that's part of what I'm supposed to be doing.
And look at the two of you now.
Yeah, now we're having real lunches, and we're fighting over who gets to pay the bill.
Beautiful. So investing in the people, investing in the data, technology. AI a component of any of that yet?
I think there's a think tank somewhere within CVRE.
Okay.
They haven't invited me in for obvious reasons, but I think with the surgence of AI, coupled with the fact that there's a lot of data out there surrounding real estate, you figure out how to put that together and use it to help your clients make decisions. It's pretty powerful stuff.
Sure.
So I don't know, but I would guess that there is a lot going on behind the scenes as we continue to evolve through this cycle and finding ways to continue to add value to our clients.
Okay. So your dad's nickname? Phil the utility guy.
No, Phil the utility bill.
Okay.
He has a lot of nicknames. That was just one of them.
Is this? There's more, but does this tie into you're trying to manage the bottom line all the time and expense control?
Well, yeah. So
apple doesn't fall too far from the tree.
My parents did a good job of teaching me the value of a dollar.
Okay, all right.
And so I try to be a good steward of the company's money. And so when I'm looking at that P&L, I'm trying to think of
your utilities are too high. What are we doing?
Thinking of
shut the lights off before you leave.
Where can we keep our culture strong and also make sure we're being fiscally responsible? So yeah, I can thank my dad for that.
You got to save money to buy nice suits.
Yeah. My dad had me. I thought the only place you could shop at was TJ Maxx and Marshalls when you were a kid.
That's thrifty,
So I had a lot of shirts where one sleeve was longer than the other, but it was a brand name. Yeah.
Wait for the clothiers to reach out to you after this podcast. That is, I think that's my number one market. So
they're pretty good at getting me on the street. I know their pitch now. Excuse me, sir. Has anybody ever told you look really nice today? Yeah.
I've gotten that fish before too.
Yeah.
So how would you define your leadership style?
So the term gets thrown around a lot, but I truly believe it. It's in servant leadership. Mm-hmm. So, my sole job is I'm there to help everybody else accomplish what they want to accomplish. And that's really the reason why I took the job. I didn't have a ton of experience in leadership or leading a market, but I felt like at that point in my career, I wanted to do something where I was making a bigger impact with other people. So that's really my focus. I go home at the end of every day and I think, did I add value to somebody else in that office? And if that answer isn't yes all the time, right? I just feel like I didn't have a great day. So I'm really focused on everybody, from the person that sits at the front desk to the top producing producer and everybody in between. And just trying to make sure that we're, my goal is to create an environment through my leadership style where people want to come to work, they don't want to leave, and they want to tell their friends it's a great place to come. Mm-hmm. And have a lot of fun while we're doing it. So, that's the key. Life's short. You got to enjoy what you're doing. So I always say I don't take myself too serious, but I take what I do very, very seriously. So, try to keep my humility and my self-deprecating sense of humor and hope it all works from there.
So, speaking of just, keeping people happy and fun, and we're in arguably what is kind of a commercial real estate recession. Yeah. The economy may not be technically in a recession yet, but commercial real estate has had a hard time. How do you keep your people motivated in a difficult time? And by the way, I love the Stanley Cup trophy. Yeah. And maybe touch on that a little bit too, but how do you keep your people motivated?
Had a few people thought that was the real Stanley Cup during the Cup years. Yeah. I had to unconnect with them on LinkedIn. I said no.
Was the white gloves in the presentation? That's a nice touch.
That was just a hokey thing I just thought of one day. I found out you could buy a Stanley Cup replica on Amazon for like $300, and it came with the white gloves.
Oh, it did? Okay.
Yeah, okay. And it came with a certificate called the Keeper of the Cup. I don't think this is what it was designed for. And then, of course, I kind of took the next level where I engraved people's names in it.
Oh, I love that.
Yeah, so if you work there and then you leave, as long as I'm still there, that cup's there. You could always come back and see your name. But, it's a great representation of the culture of who we are and what we do and why we do it, because you win that by being nominated by your teammates for going above and beyond for our clients, your teammates in our community. And the beautiful part is every month we have tons of nominations, and it's hard to pick who wins.
I love it. And the engagement. Yeah.
So it's great. It's just a fun thing to do. obviously it is hard in this environment because we have a lot of people working extremely hard, and they're not seeing the tangible results at the end.
But they're laying the seeds.
They're sowing the seeds, and it's about the process, knowing that as things turn around, they're doing all the things they're doing today are putting them in a position to be successful as the market continues to rise back up.
But man, as a leader, it is hard to they're not seeing the benefit, and to keep them encouraged to keep doing those things. But I give it to you. So I mean, you've been able to recruit and bring over some good producers. So congratulations there. And we'll talk about the clock in your office too.
What clock?
I had heard, maybe this is folklore, I don't know, you can debunk it right now.
Well, I don't have an office anymore, so it can't be true.
Okay. Well, can we talk about your old office?
Sure, whatever.
That there was when I had heard this story, it also reminded me of a credit officer. Thankfully, it wasn't my credit officer at the time, but had a sandglass.
Yeah.
The hourglass on the desk, and someone would walk into the room, and he would turn it over and say, "Okay, you've got until that's done."
Oh, that's rough.
That's brutal.
Yeah,
that's brutal.
I don't know.
Yours was kinder. You just kept the clock behind there.
Does that make people feel valued?
No, not at all.
They say like if you put your cell phone out on the table, that's not sending the right message.
Yes, I've heard that before too.
Yeah, no, I tend to run late at times, so I set all my clocks fast by 7 minutes.
Okay.
Yeah, my wife thinks it's weird, but
it is a little weird.
It helps me like kick.
You don't do the mental math and say, "Well, I know that's 7 minutes."
No, I look at the clock and I'm like, it says it's 12. I better get going. And it's really 11.
Okay, so it works.
11:53.
I would talk myself right out of that, where I say, I know it's 11:53. I've got 7 more minutes.
Sometimes I get caught. Like, is it 7 minutes fast still, or is this the one clock that's actually on time? It's a lot to keep up with. But
yeah, okay.
But it tends to work for me, except getting to the gym on time. The people I work out with know that I'm about 7 minutes late every day, but I'm consistent.
So what about your phone, though? I mean, your phone is always the right time. You can't set that one ahead.
I don't really look at it. I just look at my wrist. I look at my wrist. I try to keep my phone as best I can in my pocket. Again, from a distraction perspective, and like again, when you're communicating with somebody and you have your phone out, thankfully somebody taught me that lesson. It doesn't speak that, hey, you're valued, I want to speak to you. It speaks. Yeah. Like I'm preoccupied. Like if I get the right call, me and you, this conversation's about to be over.
Yes, I'm looking for the next. Better,
I'm not perfect
thing.
on that. I'm sure people may listen to this and be like, that's total. What? Mike pulled out his phone when I was talking to him one time. Yeah, leadership is for not for the faint of heart.
It is not.
And it requires you to constantly be getting better and learning, because when you do something wrong, everybody notices.
Yes, they do. And all we could do is learn from our mistakes and admit when we have issues, and try to move on. Where do you see the market in 5 years?
Just the overall health of the market.
Yeah.
There are a lot of circumstances out there out of our control. But again, to kind of go back to where we are here in Tampa Bay, it's a great place to be. Real estate is a great asset class for wealth building and creation and maintaining and all that. And a lot of what we do is based upon our experience and our knowledge. So I think we're always going to have a role in that. I mean, a lot of people may go to sleep at night wondering if they're going to be replaced by an AI robot.
Sure. Yeah.
But we're all people, right? You're a person, right? At the end of the day, decisions are still being made by people at the end of whatever that process is like. So we're in a relationship business, and I think the overall health of the business is, the outlook long term is still great. We just got to power through a little bit of slowdown here in certain aspects of it, and we'll be better than ever.
Okay. I think it's a good place to wrap it up. Mike, anything else you want to tell anybody about?
No, I'm good. I'm good. I'm sure everybody had their fair share today.
All right. So if people want to find you, where can they find you at?
Well, if you in the mornings, you can find me at Suka. That's where I work out.
Okay. All right.
Other than that, I'm usually
7 minutes late.
7 minutes late-ish. Or I'm at our CBRE office, or I'm either on the flag football field or the little league field.
Right.
And then whatever time I have left, I'm sleeping. Other than that, you can. I don't know where else you'd find me, but
find you on LinkedIn and all the social media.
Yeah, you can find me on LinkedIn, and I don't know about social media, but LinkedIn for sure.
Okay, good.
Yeah.
All right. Well, Mike, thanks for coming on Money Market.
Absolutely. My pleasure. This was a blast.
Good. If you have a question or a future show idea, would like to be a sponsor, you can send us a message at moneymarket@bankoftampa.com or find us on LinkedIn, X, Facebook, and on Instagram at Bank of Tampa and online at bankoftampa.com. Thanks for tuning in. Thanks for subscribing, and we'll see you around in the money market.